What if the next big ASX winners aren't the banks or miners, but something entirely different? Today we're diving into 3 ASX ETFs that don't follow the standard index game. These are specific fields that could shape global trends for the next decade, and right now they're flying under the radar. Our team's been analysing markets for decades and are sought after by Bloomberg, CNBC, Sky News and the major papers because we cut through the noise and show you where the smart money is heading. And because we hold an AFSL license and are a registered training organisation, you know our insights come with a level of credibility you won't find anywhere else. Now, stick with us because by the end of this video, you'll know exactly which 3 ETFs we believe could beat the next ASX bull run and why they just might be the next big thing in your portfolio. I'm Philip Tortevsky, joined by analyst Pedro Banales, and we are Wealth Within. Good evening, mate.
Good evening, Phil. Can I say I haven't been so excited about what we're going to talk about next in a long time. So I'm very much looking forward to this.
Yes, we're getting into some trends and investments that could really be those huge growth stories moving forward. So let's dive straight into it now and start off with the first ETF, which is called Robo. Now, Pedro, I want to dive straight onto the charts on this one and get going because Robo, it's an ASX ETF, obviously. What they do is global robotics and automation. Now, why this is such an exciting trend, and if we are likely to go in another bull run over the next year or so before the market does finally dip away, I think it's important to try and line up your next lot of investments moving forward with a bigger time horizon to see really what's the thing that's going to come next. And robotics is one of those things that is already starting to take shape and get traction in terms of what comes next following automation and AI. And, you can see clearly the global robotics market is projected to surge from US $64.8 billion in 2024 to $375 billion by 2035 with an annual growth rate of 17%, fueled by automation, AI and labor shortages. Now, we're talking at almost 20% of year growth in industry. That's huge when you compare it to most other industries out there that are in single digits, if not less. And so this is the hot space right now to be in, and getting exposure through this particular ETF on the ASX is beautiful because you don't need to go source out a company. You can purely play the space and the theme itself. And I want to start things off on the monthly chart here, mate, and I'll get you to have a look at it as well soon. But right now what we're seeing is a beautiful little expansion and breakout. And I say that because we've experienced one of those consolidation type moves since 2023, where the market had been going sideways between the $80 level, if you will, and on the downside, the $60 level or $65 level. Now we've broken out of that, in fact, broken out of the January 25 high. We are starting to stall a little, and I would not be surprised if this market does come back down to potentially test this $65 level, this $79, $80 level before we break out. That would be an ultra bullish scenario. It wouldn't be even surprising for the market to go back to around that 75 level or even down to the 67 before taking off again. But I really like the fact that we're in trend now. We're moving to that, I guess, really nice sustainable rate of rise. And more than anything, yes, there is some resistance, and I don't want to take everything from you, but there is some resistance around this $91 level. But for me, more than anything, what you often find, a lot of people are getting into these index ETFs. Now, the index ETFs, there is pros and cons with all of that. But to me, a major con of that index ETF is the level of volatility that you get. You're capturing 3, 4, 5% moves, maybe 10% moves. The market has to be super bullish. And we know generally the market on a year basis is up around 8, 9%, no more than that. So when you look at this, and you measure some of the runs, I mean, even from this low in 2022, 38% run through there. You've got another run from the most recent low in April, 38% in a couple of months. That's resembling a stock. That's exciting about that kind of volatility. So I've taken enough of the space on this one, mate. What are you saying?
I really like this one, and coming from an automation background myself, I can tell you that there's a lot of innovations in this space. You've got IoT, Internet of Things, all this digitization that's coming into manufacturing, and of course the big one is America trying to bring their manufacturing back, and that's going to take a lot of automation. So going on to the chart, what I really like about this is that it is in a long-term established uptrend. So we can establish that already. The trend is up. And you mentioned that there is volatility, much like a stock. And that's, I think, a key point that people should know, that you can trade these like a stock. It's not a set and forget instrument. A lot of people say, oh, well, I just invest in ETFs. I put a bit of money in there and I forget about it. Well, that's not always the best strategy, because you can trade these actively and make a hell of a lot more than just, investing in it passively. And you can see that from the weekly chart here. You've got these huge runs followed by these falls, another huge run followed by a fall. I mean, if that isn't, pattern recognition, I don't know what is. And really, this was the latest run that it's had. And I just wanted to highlight just the momentum of these runs. You can see that, they are quite vertical. So there's a lot of, volatility there, like you mentioned. This one is the most vertical out of all of these three runs. So you might expect a little bit of heat to come off it. But again, it just highlights why you need to be active in this space, because you don't want to be the last one getting in and then ride these all the way down and having these, 20 to 25% falls, only to want to get out thinking that, you're going to lose all of your money. So being active definitely in these ETFs is the way to go. But I think that the overall trend and, mega trend in that sense is up, and there's going to be a lot of innovation in this space. So I do quite like this one.
Yeah, I mean, you couldn't have raised a more important point about the fact of being active in that space. It's this myth that's sold right about passive, but as you've seen, there is volatility in those ETFs. And on that point, getting this book, it is How to Beat the Managed Funds by 20%. It's Dale's book. It's a beautiful introduction on how you can be active, not only in stocks, but across all markets, including ETFs. And now, given it is so hot, an area of investment, applying those techniques on the ETFs can really give you that real clear direction on how to make the most out of those investment vehicles. The link is in the description in this video, so please go and check it out and get that book. Now, we're going to move on to the next ETF, Pedro, which is an ETF called HGEN, but stick around because the one after is probably the most complete investment you can get right now in the hottest investment area of the last couple of years. And I'm not going to give it away, but stay tuned. But for now, let's get into HGEN. Now that's on your screen. And this one is hydrogen. I'm going to get your thoughts in a second here as well, Pedro, on hydrogen. But I'll explain some of the dynamic around the mega trend, as you nicely coined it. And that is HGEN, the ETF, invests in companies involved in hydrogen production, fuel cells, electrolyzers, and hydrogen integration, meaning, and this is the important part, it captures multiple parts of the hydrogen value chain. It's not specific to one small niche of that. And the global hydrogen market is forecast to more than double, climbing from 262 billion in 2024 to over 556 billion in 2034 as clean energy and decarbonisation drive demand. Now, there's been all this talk of electrification. Hydrogen is the new one on the lips. And if I go to this monthly chart, another example of why, as Pedro mentioned, being active with these markets really allows you to get in on the trend early enough and capture the best part of that move. And I haven't applied that momentum to its fullest potential, but something like that right now, we've finally seen a break to the upside, and it's so exciting because we're very early to maybe the onset of a huge new mega bull run coming out of the hydrogen space. And why, to me, it's so exciting? It's two-factor. Broken this momentum line, and since April 2025, if you just measure the green versus red on your eye, this is the longest in terms of time that we've gone up, meaning the buyers have been able to sustain an up run for longer than ever. In history, it's always been 2, 1, 3 months, 2 months, 3 months. Now we've gone up for 1, 2, 3, 4, 5, and look at the nature of the closes. There is no seller activity inside. It's all buying. We've broken through the significant level of resistance from that momentum. So there are a lot of things lining up in terms of potential for why this could be a major low right now. We're also up 67%, and we have not seen a 65% move to the upside since this thing IPO'd, and I wouldn't even call that up 65%. So Really exciting times, but to me, the only thing to think about now, and this is why it's so important to go and get educated, to go and look at our courses that we do teach, it's understanding the dynamic between buyers and sellers, because that'll give you that confirmation of when these major lows are set in stone. And right now, I think this is very promising, but I want to see what comes next with the sellers, because if they fail and we manage to hold, these kinds of levels around here and start to reverse back up, I think that'll give us a real strong sign for what comes next. And the third leg, following the sellers, or the second leg up, could be even more powerful, or should be even more powerful than what you've seen here, if we are at a significant or a major low. So this, for me, is one you must be putting on your radar and watching, and getting that timing right for when you're about to potentially pull the trigger on this new area or this new world that is slowly, although it's not in the media a lot, it's definitely getting buyer interest, and that often can be a clue, because it might be too late once you start hearing all about it in the media. But thoughts, Pedro, on this space? I know you do look at it and you do cover it. So is this the low?
Yeah, I have, and I do. And really, who was really early to this space? Then that was Fortescue Metals, FMG. They copped a lot of slack for getting into the hydrogen market many years ago, and it hasn't really taken off. But they were really forward looking. Hydrogen can be involved with fertilizers, the petrochemical industry, the steel production. Of course, you've got energy, like energy cells and so on, clean energy. So that it's so useful, this type of commodity, that I think that this is going to be the next kind of mega trend, as we like to call it, in the coming years. And judging by the chart, that says it all, doesn't it? So going to the chart, in saying that, I think that the stock is looking quite nice. You've covered the monthly chart nicely, so I'll move on to the weekly chart. That level that we've identified, say around that $5.50 to around that $5.60. I think that that's going to be important for this stock. And whether it comes back and fills this gap, we're still yet to see. But the stock is very, ETF, I should say. Technically it is a stock, because you can trade these just, on ComSec or any, broker platform like that. So whether it comes back to retest that is yet to be seen. But the volume is increasing in these up moves. And you mentioned before how it's important to be educated on learning these types of bar analysis, because to the naked eye and to the uneducated eye, this is just an up move. All they're seeing is price moving up. But how is it moving up? And that's where you and I see this in a whole different lens. We can see the relationship between buyers and sellers so much more clearly. And, it only takes this last bar here to just show you the direction that the sellers want to go in. And really, if this stock keeps on moving up, sky's the limit, basically. We've got another potential level around that $7. And then we've got another, interesting level, say around that $8.20. So that represents a, pretty good upside. From now, it's around that 13% to that first level. If not, then I'll just expand that out a little bit so people can see. Then to that next level, you've got that 30%, and that's just the beginning. I'm just talking about the short to medium term, projectiles here. But moving on to the larger picture, there's huge potential on this space. And the good thing is, going back to Fortescue, you don't need to pick the individual stocks. You don't need to be exposed to all that risk about whether the company has lagged in a different sector or a different aspect, or they're not profitable and the stock's going to fall away from you. You're investing in the trend, in the overall trend of the hydrogen space. So I do quite like this one.
Yeah, and I don't know if you also mentioned cars, right? It's starting to get a big uptick in the use for cars and fuel and all that. So one definitely to watch. We've obviously seen what the electric vehicle space has done in how quick it's been implemented. But now time to get into the one where, real potential in terms of most of the world is viewing it in terms of one critical niche investment, but we're looking at something, and I won't hold you to it anymore. It's the ETF called CRYP. Now, if we go to the chart, it is the Crypto Innovations ETF. Now, where this differs for me, Pedro, is a lot of people, when you talk about crypto, they say Bitcoin, Ethereum, Ripple, the girl that spat on the thing, meme coin, and that meme coin. It's a whole bunch of different coins that they're talking about. Where this differs, it's like that conversation that would have potentially been had back in 2000 between .com companies and the internet. The crypto innovations exposure, it's not just Bitcoin or cryptocurrencies, but the companies shaping the industry like exchanges, miners, infrastructure providers. So the technology itself, that's the difference. You're investing in that, not just the coin. And that is what separates this kind of investment versus playing the coin game. And I think that's very important to distinguish first before we even get into any of the chart. And I'll get you to look at that chart, in fact, because I've done the first two. But just quickly, the institutional adoption and blockchain, we're seeing blockchain being pushed into most mainstream areas, and it's happening with a lot of places, and it's expanding the crypto ecosystem, with the market expected to grow from US 1.8 trillion, imagine that, 1.8 trillion in 2023 to over 5 trillion by 2030, which is an annual growth rate compounded of 16% a year, not far off the robotic stuff. So huge growth potential in the adoption of the blockchain and that side of things, not talking specifically about a coin and I'm going to, I just wanted to really hone that point in, because that's what this investment offers. Now, please, mate, take it away and have a look in terms of whether that chart looks appealing to you.
Oh, it sure does. And, one of the main aspects that I see from this is the risk and the security, because you're trading on this on a reliable exchange, like I mentioned before, say ComSec, reliable broker. If you're trading these other type of, Bitcoins and cryptos in different platforms, you've got the risk of that platform, something happening to it if it's not regulated, or, if they can't meet their obligations. So you can actually trade this on a reliable source. You don't have to buy the coin itself. You don't have the risk of hacking, that somebody's going to hack your coin, and you're investing in the overall trend of the market, which the trend is well and truly up. I mean, it's been up since 2022, basically, when it hit that low. And what I like is that, usually when a stock or an ETF IPOs, it does usually fall, as it comes out. But this one, it did that, and now that's already been done. And now we can get on with business, and the stock can start rising again. And that's exactly what it's doing. This is what you call bullish. You've got higher highs, higher lows. It continues to do that. We've got, price trying to retrace back to that low there, but it didn't quite get there. It actually got picked up again. The weekly chart is looking beautiful. We've got volume coming into it. Before I would have said that this stock or this ETF should have been called CRAP, but CRYP, I think it's a good acronym for it, because really this does represent the whole crypto market, and then I would say the whole blockchain market in a sense. So this is for the people that don't necessarily know how to invest in Bitcoin or other cryptocurrencies. They don't want to go to those exchanges. They don't want to do QR codes and own those types of coins. They just want to invest in the ETF and leave it at that. But again, it's not something that you just blindly go into and then just leave it, because it does have these ebbs and flows, and there's better opportunities to get in at the opportune times. And when we did a podcast on this, Phil, as you would remember, on buying the dip versus falling a knife, and how profitable you can be if you get those dips correctly. And that's exactly what you can do with this one. And I think that if you would have got in at the right time, you would be doing fairly good. And I think that there's an opportunity coming up as well on this one. If you look at the weekly chart, I'm sure our students will be having a look at this and kind of salivating and waiting for the opportunity.
Yeah, fantastic. All right, now if you want more hot stock tips, check out our video: 3 ASX oil stocks to win after OPEC shock.